Welcome to the MSP Corner podcast. Before we kick off our show, we would like to share what our main objective is at the MSP Corner. Our main goal is to help CEOs build profitable and self-sustainable IT service firms. We are not just providing tools for IT firms, we will be sitting in meetings with you to ensure your IT firm stays on track. The first area we are focused on, strategic sales. IT firms are stuck selling technology or IT support. We will provide you with the blueprint so you position your firm as an added value to your prospects. We will have framework on how to sell value so you influence the prospect into selecting your firm. The second area we see many IT firms struggle in is marketing. 90+% of businesses rely on antiquated marketing methods. The most popular choice, word of mouth. We have proven methods on how to attract the ideal prospect. Our framework will include how to become the online authority and be the business influencer for an industry. The third component to our package, scaling. IT firms walk away from opportunities because they lack the bandwidth or skill set to scale. We have lined up reputable businesses so our members can hire on-demand resources that will allow them to scale their business. The fourth area we will offer help in, selecting the right tools. In order to deliver value, you need the right tech stack. Our platform will offer information on products that are the ideal choice for MSPs. The fifth area we will offer help in is with documentation. Templates are a critical component when building an MSP. We will have contracts, proposals, SOWs, collateral, and much more in the template section. You will have every document you need to start up your managed IT service business. Thank you for tuning in. Let's go to our next podcast. Hello, everyone. Thank you for tuning in to the MSP Corner podcast. I am your host, Fernando Leon, and I'm joined by my co-host, Gregory Moravietz. And today we're going to be talking about cybersecurity insurance. As all of you know, cybersecurity and security breaches are a huge concern for all IT service firms. So today's topic, we're going to be interviewing a cybersecurity insurance firm. So, and their staff. So we're going to be interviewing the staff at Insurance Office of America. And this insurance firm is the 18th largest privately held property and casualty insurance agency in the country with 60 locations. They have 1,300 team members, and they pride themselves on being the most customer and employee-centric insurance agency in the world. Insurance of America makes resources available to their clients that are on the cutting edge of technology while still providing the personnel services that made them a $260 million company. They remain privately held. And let me just do a quick introduction on each colleague here. So first we have Erica Diaz. She is the practice leader of this cyber insurance division and has worked on the insurance company side, including claims, the agency side of insurance, and is renowned for her extensive knowledge of policy construction. We also have Steve Miller on this call. He is the managing partner and lead insurance agent of the innovation practice, specializing in cutting edge cyber insurance products and clients focused on technology. And the last introduction is Jason Levine. He is part of the newly opened Chicago branch in the Midwest region of Insurance Office of America and has been involved in technology businesses and cyber insurance since the inception of the cyber insurance product. So let's kick this show off and start off with some questions. First off, I want to start off with Erica. Erica, why is it important to secure specific cyber insurance instead of the coverage that I have purchased in the past, such as general liability insurance?
Well, Fernando, first of all, thank you for the very warm introduction. I think it's important to understand what the policies are intended to cover. General liability insurance traditionally covers bodily injury, property damage, and advertising injury claims. It's about tangible physical incidents like on site injuries or damage to another's property, say by an employee. What it doesn't address are the losses from cyber attacks, which are typically excluded and create a gap in coverage. And that's addressed by cyber insurance. Cyber insurance covers cyber attacks and third party privacy and security liability. With the business world becoming increasingly digital, a shift that I'm sure your MSP audience knows very well, the risks grow. Companies are leveraging cloud technology to enhance data utility and efficacy. And with more digitization comes more data. More data online has increased cybercrime, which exceeded 22 billion in 2022, according to the FBI IC3 report. And regulators are paying attention. A number of privacy laws that add layers to the already complex data breach statutes have been enacted over the past couple of years, with more to come. And they're bringing they're bringing more data sets under cover. So when we think about this very dynamic cyber and privacy landscape, it's not just about having insurance, it's about having the right insurance that keeps pace with the changes. And a dedicated cyber liability policy is a must have for all businesses to remain competitive and to stay in business.
Now, so I know that Gregory's going to have more questions than me, but my first question that pops up is because we have an MSSP, and are we required to get a cybersecurity policy to protect? Well, is the client supposed to get the cybersecurity, or is the IT firm required to get, or do you require that both of them have cybersecurity insurance?
So, MSSPs are not a regulated industry. So, there isn't a regulatory requirement for the coverage. It is certainly advisable for both the MSSP and the client.
Hmm.
As an MSSP, you might also be interested and probably need to get alongside that coverage Tech E&O. But it's a critical coverage to have. Say your MSSP has a ransom attack. If they have ransomware, they've got privileged access to your systems, and that ransomware can be propagated onto your computer systems, and now you're both down. So having both ends covered is really ideal.
Got it. Okay. Well, that's great to know because this topic is coming up more and more with conversations with prospects and clients. So I just want to make sure that we're directing people in the right path because
Sure.
it's a huge concern.
Yeah.
It's a topic that's discussed every week, and we see so we I mean it seems like every week there's a major cyber attack on a large organization. And I do know this for a fact that my wife's old employer, they had a security breach and they were down for 2 weeks, and they're a multi-billion dollar organization.
I was going to
And
say 2 weeks is pretty good.
yeah. Oh, is it really? Wow.
Yeah,
Wow.
I think the average is about a month.
Ooh. Yeah. Imagine not having yeah, access to email for 2 weeks. And
Yeah.
yeah, it was very painful. And but we've seen this, it seems like every week there is something going on. Somebody is being attacked, somebody is held ransom. There's this just a constant a case of lots of cyber attacks going on. So, and then there's lots that don't get reported, right? I mean, small businesses
Yeah.
don't are not reported by to the news, right? So,
Right.
yeah, and that's the shame, and that's where I think that's what causes a lot of this invincibility type of mentality. Some firms are like, "Oh, I'll never be attacked," and so they have this feeling of invincibility. They're not going to get. They don't have an X on their back. So, and we were trying to educate organizations that that's not the case.
No, I
So,
think it's a misnomer out there. A lot of organizations believe that if they're not a high profile organization, they're not going to be targeted. But a great deal of cyber attacks aren't targeted at all. They're random. I think it's CrowdStrike's most recent state of the market report. They listed, I want to say, and I can't recall the percentage exactly, but just a high percentage of
mhm,
attacks that they investigated were random. They weren't targeted at all.
interesting. Yeah. Yeah, well, they have this automated. I guess I don't know much about the hacker world or this type of methods they use, but I've been told that bots. I mean, this is all automated, right? They send out bots to see what networks are vulnerable, and as soon as they find something, they're able to take control. So it's a little scary how it all works.
Yeah, it is. I mean, you can go online and free of charge, you can run a scan of an external network so long as you've got the, website address. uh, the bad guys have that same sort of access.
Mhm.
And what shows up on these scans can also be, detrimental because if you've got some unpatched software and there's a known exploit for that software, that's just low hanging fruit.
Mhm. Mhm. I agree. Hey, Greg, feel free to jump in if you have any questions, but I'm just gonna.
Yeah, I do.
Okay.
Can your contract protect you where your cybersecurity insurance doesn't? Can you push a contract forward that says we're not liable for anything no matter what happens, and you agree
Well,
to that? And then won't that protect you from being like sued or included in some sort of cybersecurity claim?
Well,
No.
so I'm going to add a little bit here, and then I'm going to let Jason and Steve. I'm sure they have a lot to share, but I'd say first off, I'm not qualified to give any sort of legal advice. It is not uncommon. Uh, if I, harken back to my days as a claims adjuster, it was certainly not uncommon to see mutual indemnification. Of course, you could bring a suit in court for, any reason, so it wouldn't necessarily preclude someone from filing a lawsuit. And I'll let Jason, sorry if I cut you off.
No, not at all. I was just going to mention, anybody can sue for any reason. And I echo what Erica says in that we're not contract attorneys. There are things that you could put in a contract, such as a mutual hold harmless, different indemnification language, which you can work with your lawyer on. But as Erica was alluding to, you can get sued for anything at any time. And so much of insurance is about cost of defense. So it's not
Yeah.
necessarily that you did anything wrong, but part of the insuring agreement is that you have the ability to submit an incident or claim and have defense in order to mitigate a loss. So it's not just what can be proven against you; it could be what is alleged against you.
Yeah.
Well, all the cybersecurity cases I've been involved in, the insurance companies pretty much, beat each other out over the result. There's never really it doesn't go to like, you know, dun dun dun. It doesn't go like courts and the district attorney isn't involved, no one's involved in it. It's just backroom, hey, how much are we gonna pay? How much are you gonna pay? That kind of thing. So can your insurance company like help you get out of that situation where I know they're going to ask for as much as they can get. So is there something you can do to get you to the position like I just mentioned, a contract? Is there anything else you can do to get you in a position where your insurance company is going to be going in with brass knuckles versus a target?
Sure, sure. We should think about contracts and insurance as complementary, right? We don't buy insurance and then just not have a contract in place because insurance will cover it. And we don't want to just rely on contractual limitations of liability as an excuse not to buy insurance. They do uh, commingle and complement one another. The importance here is uh, that we don't know what any one particular attack or incident is going to look like. So there's no foolproof way to say, all right, we're not going to carry it, but we want you to. All parties and all businesses in 2023 really should be covering and carrying cyber liability. And the contract combined with multiple cyber policies will result in those carriers going in and try to figure out contributory negligence or potential fail points so that they can have that conversation. You mentioned brass knuckles. Yeah, it's not always the easiest discussion to have, but it's a whole lot easier than having one party with insurance, one party without, and the fail point was on the other party's side, and now party one's insurer is trying to figure out whether there's actually coverage afforded or not, and you could end up without policy proceeds in any case. So really important to carry your own and make sure that your customers, vendors, everybody up and down the line is also insured.
Yeah, that's probably the best way to transfer the risk.
Also, it's like, do you guys kind of help with the activity, like the activity type? You know what I mean? If I were to be, key master, right? And I would have all the keys, and it was like, okay, Gregory's the key master, and he left the keys at Starbucks, right? It's his fault. So then I would say to myself, man, I don't want to be the key master anymore. If it's something's going to get pointed at me, can I not do it? Can I say in my service offerings, not the key master, you know what I mean? And get out of something that way, get out of it with just saying, look, we never offered that service. So it wasn't like our responsibility. So you can't go after us for it.
I think
Absolutely.
this.
And part of this
Oh, go
also
ahead.
goes to the underwriting hurdles, right? So we're talking about how policies respond for coverage, but the critical component is before we have coverage, when we're applying for coverage, the insurance carriers have several long questionnaires that have to be answered that talk through what services you are performing, which you're not, and what controls are in place. So you can consider it kind of a risk management review, and those things all play into what coverage is needed and what coverage is purchased and how it's priced.
So on that vein, I've seen questionnaires be like 50 questions long. Like it says, do you have a password policy? Do you have a password retention policy? Do you have a cybersecurity policy? Blah, 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 blah. There's 50 of those questions. Do those like start taking off dollars from your premium when they get answered yes or no? Or what is the purpose of that questionnaire? Is it just at the bottom you get a score 76, which means your multiplier of the base amount is 1.23 or 1.34? How does the answers to those questions, because there's so many policies that like, do you have a GDPR policy? Well, what if I don't? Do I need to get one because it will reduce the cost of my insurance? Does that happen?
So, as the former underwriter, I can provide a pretty boring answer, but the purpose of these questionnaires is to help the underwriter understand the risk, right? So, insurance is, a sharing of risk, right? And as the insured, you transfer some of that risk to the insurance company. And of course, the insurance company, they decide how much risk they want to take on within their portfolio. Um, and they'll set certain guidelines around ensuring that underwriters are adhering to uh, to the way that they want to build out that portfolio or maintain it, or both. So the reason you're asked all those questions is so that if you don't have a GDPR policy, well, I'll take a look at your operations. Do you have clients that are potentially from the UK, or from, Europe generally? If you don't, I might disregard it. But the end result isn't a score. There are lots of different types of underwriting, but ultimately, if you're manually underwriting, you're assessing all of the risks. You're assessing all of the favorable points on those applications, and you're determining whether or not this is a risk that fits within your appetite for your portfolio. And then you're deciding whether or not, and of course, there is a rating machine right? And that rating machine is top secret. The underwriters don't know it. And so we do input certain information into a computer system. And there are certain levies that can be pulled to either apply credits or, which is like the opposite of what you would think it would mean. But so we can either increase the rate or reduce it. Ultimately, we're going to put out a quote that we think is suitable and in accordance with the level of risk that we're taking on.
Yeah, and then the next question, sorry if I'm dominating here. The next question is, so say I get bashed and we lose and I have to pay out the max. We have to pay out the max of our policy, and you're kind of looking at me now going, wow, he's a big time risk. Do you work with people to like lower that risk, or do you just go, okay, next time around we're going to raise the premiums by double and we're going to cut him off if he gets another issue? I mean, how do you stay in the good graces of your cybersecurity provider other than not getting hit?
It's a
But
good question.
sometimes you just get hit.
It's a little bit market dependent. If we look at last year, on average, cyber rates were up something like 30%, and they're much more flat to negative this year because it was a pendulum that overreacted. So in a very difficult market, if you have a large claim, you're more likely to see proportionally larger increase. But just broadly, the idea of insurance is spread of risk, right? So that you're paying, say, $10,000 for insurance, and you go and have a $150,000 loss. The insurance carrier is not going out of business because they've got X number of other clients paying $10,000, and now we're pooling money and sharing risk. Uh, Same way, the same approach really applies on a renewal, which is they're not going to try and get all of the premium back year one. There will probably be an increase that is moderate, but the other factors that go into that is oftentimes the claims process and the response are a learning opportunity, and they are reflective of how the affected organization is improving, is being good stewards of their own cybersecurity. So part of this is really the narrative that we as brokers to our clients tell to the marketplace. Yes, we see that our company had a breach last year. However, here were the mitigating circumstances, and here are the policies, procedures, protections that have changed so that that type of claim won't happen again. And therefore, we're actually a better risk than we were last year. So it's a little bit of a science and a little bit of an art.
Another thing that I would add to that is Insurance Office of America. We are independent agents. So we don't work for the insurance companies. We work for our clients. So we look to support them throughout a claims process. We do have dedicated claims staff that can help through a claims process. Um, but to your question, Gregory, when it comes to renewal time, to add on to what Steve said, of course, it's with all insurance. What happened? Is it likely to occur again? What's been put in place so that it doesn't occur again when we're looking at renewals? However, as an independent agent, we have the ability to go to many, many, many insurance companies. Our reach as an independent agent is any insurance company worldwide. So we have the ability to get different quotes on behalf of our clients. That competition helps us keep premiums in focus even after a loss. Steve is correct. Of course, after a loss, chances of your rate going up are pretty darn good, but competition does keep that in check.
But I know that I want to just counter that. When you go to get a new policy, they're going to ask you, did you have any issues at the last insurance company that you were at? And then you have to say yes. And then they're gonna, probably give you a higher premium based on that, right? Because
No, that's not true.
oh, that's not true. Okay.
No, I mean, as a former underwriter, um, if I get a submission and this potential insured recently had a claim, I'd just like to know what happened. I'd like to know, was it addressed properly? If it's handled with insurance, I have a lot more confidence that it was handled properly than if it hadn't been, right? And so I'm concerned about remnants causing another claim during the policy period that I'm on the risk.
Right.
So So yeah, I think underwriters definitely take into account the steps towards remediation. And I think Jason and Steve, they both brought up really great points. After the claim, you've done this remediation, you've learned these lessons, and it does make you a better risk.
I would say an addition is it is a bit of the Wild West with the insurance marketplace. It's a nascent industry. Coverage is offered very pretty substantially from market to market, and you have a mix of traditional players that we would all know the names of, along with insurtech startups. Some of these insurtech startups come in with a much shorter subset of questions, a little bit more of an automated underwriting process, and in some of those cases, those carriers will say, "Have you had a claim?" If you hit yes, they're going to just say, "No, thanks, we're not going to cover you. We're only looking for loss-free clients." That's a individual insurer decision. But when you have a more complex risk and you have an actual human underwriter at the other end, a la what Erica did in her past career, you're going to be able to have those conversations and considerations.
That's a great point, Steve.
And Steve, I want to point out why it's important to be with an agency that has a specific technology practice versus the agency that, let's say, I've been working with for just on the liability side. Could you expand on that and share a little bit about why that's so important?
Yeah, as I mentioned, the industry is brand new, and it's when I say brand new, a decade or two. So insurance carriers are still struggling to figure out how to appropriately assess risk and underwrite in a way that they can be profitable. Right? That's the point of an insurance company, is to facilitate risk transfer while remaining profitable, remaining in business, and being able to pay out claims.
Hmm.
The analogy I'd give you is if you go and buy a high performance exotic car, let's say you finally got that Lambo, and you need some service done, you're not going to go to the quick lube down the street. You're going to
Yeah.
go to the dealer, right? Because they are familiar with how to do this. There are a lot of professionals in our industry, right? The three of us are among them, but we're not the only ones that have expertise in cyber. However, it would be short-sighted to just stick with the one, the broker you might have had for 20 or 30 years, assuming that they have spent the time educating themselves on the changes in the marketplace, the nuances of cyber, and not just the knowledge, but the focus in the area that lends the relationships with the underwriters and the ecosystem that really drives the best results.
Mm, great.
Yeah.
So I was in a claim where the customer had been hacked. Their their ransomware had been put onto their system, and they'd lost a couple of gigs of data. Now, the insurance companies all got involved, and everybody tried to push everybody else away. But the end product was that the bills for the cybersecurity uh, IT firm were ridiculous. They were charging $14,000 to figure out where the ingress point was when it was an email, and it was like, and then they were charging $18,000 a gig to restore the data, and it was like nobody even batted an eye at that, and I was like, well, that's not how long it takes to restore data. You know what I mean? No, I said, even if at $100 an hour or $500 an hour, you'd have to, you could carry that many files over from one area to another by hand for $18,000. You know what I mean? So how do you protect yourself against, the fact that no one understands the technological back end, like Congress? They just kind of go, I don't know what
Mhm.
the internet is. I don't know what a URL is. They don't know how long it takes to back up a file. And you see these massive bills coming over from these companies. They know the insurance companies are oblivious to what's going on the back end and how to do the work.
Well, Fernando, first off, that's like a great commercial for your business. You're priced right. Um,
Yes.
so so I would say insurance companies are careful to work with professionals that they have taken through a vetting system, right? And these professional firms are accustomed to working with insurance and understand the process, right? It is expensive. What you just described with the email, it sounds like it could have been data mining, right? they know the point of egress, right, was it was a business email compromise. However, they're scanning through a ton of data looking for very specific data sets in order to determine whether or not this triggers a privacy law or a data breach statute. So it is complex work. And I do think it's costly. And I think that's one of the reasons why it's super important to have cyber insurance because yeah, they didn't bat a lash because cyber insurance wants it done right and the first time, and they don't want this coming back to bite them as a third party claim. So this is a great argument for, first of all, right, using well priced professionals, and then also for insurance, which will pick up what they consider to be a reasonable fee for services that they understand are required. And nowadays, a lot of companies are not relying just on that claims adjuster, but they have risk engineers, cyber engineers that are on staff and they help assist when there is a question about whether or not, this particular invoice, is applicable to the incident at hand. And also by approving expenses in advance, they can control some of those costs by ensuring that the only approved work is work that would fall under the policy coverage.
Okay, so from in that scenario, say I submit a bill to X company and I said I did some forensics and it's $250,000. And your cybersecurity guy says, no, no, that's crazy. That's insane. And then I go, oh well, I mean, where are your teeth there? You can't enforce anything, right? And your cybersecurity guy just said that it was too long. And your argument was nice in the back end of that. Well, it's complicated. So, you know what I mean? So yeah, it was complicated and it cost you 50. I mean, how do you where are the teeth? There's no teeth to bite off, and say no, or a judge can't say no. Who says no
Yeah, the
to that
claims adjuster
price?
says no. I mean, you need prior approval. If you have a claim and you decide, well, I'm going to fix this with this vendor, I think they're really good, and I'm going to do all these things. Of course, you have, you have the burden of mitigating your loss, right? You have the right and the burden of that. So, yeah, certainly you have to do what you have to do to get your business back up and running. However, the policy does have specific language that requires prior approval. Most policies, I can't certainly speak for every single policy, but most will require that prior approval. And it's to keep you from incurring expenses that would not be otherwise approved. And also because, they're negotiating rates and discounts with these vendors. And so suppose, everything just happens to be covered and they decide this is a reputable firm. I'm going to go ahead and I'm going to approve these expenses, this $250,000, they might still only pay whatever their negotiated rate for that type of services. So the guardrail is prior approval, getting the adjuster to say yes first.
So you want to make sure that your plan has this prior approval initiative in it with all the is there any other
Right.
things like that you want to make sure, I mean, that's one thing. I didn't even know about that. So like how do I know what the other like safeguards are for myself unless I've been through the pain of a process? Is there like, hey, you got to have prior approval. Hey, you have to have uh, uh, a 6'4" bodyguard or whatever. I don't know. I mean, what
This
do
is
you
a good
need
one
to
for Jason or Steve
yeah, what do you
as
need to
Yeah.
have?
agents.
Yeah, absolutely. I mean, this goes back to your last question around, well, why do you need an expert? You need an expert because when something happens, the first call, maybe the second call after your security team is going to be or should be to your insurance broker, right? Our job, as Jason mentioned, is to work for our clients. That means when we have something come in, we're your advocate. You're not reporting to the insurance carrier at that point. You're talking to Steve or Jason or one of our colleagues, and we're going to give you best practices, which is in most cases, let's go ahead and notify the insurance carrier. Let's make sure we satisfy the policy requirements for being a diligent insured and getting notice where it's required. On the back end of that, then you get adjusters assigned and you get linked up with the vast ecosystem of resources to start the claims process. But throughout that life cycle, you really should have a strong advocate in your broker. And then one other thought, really back towards your question about kind of cost overruns. I don't think I'm revealing an industry trade secret to say that insurance carriers don't like to pay out claims money, right? So they do their very best to keep these things pre-negotiated and to control costs. It's not perfect all the time, and that's another area we can assist our clients to make sure that everyone's being a good steward of expenditures.
Yeah. So also, I mean, if you've ever read an insurance contract, I have. It makes no sense to me at all. It just bibble babble and jabble jibbles. It's like our contract with legal. I don't understand a word of it. And if I don't understand it, my customer doesn't understand what my insurance policy says, right? They don't know.
Right.
And so how do you get past that? Because even if you're my expert, I don't really necessarily know if I want you talking to my customer and telling them where I'm weak or where I'm strong. How do you safeguard yourself with your customer from a policy perspective, explaining to them, I'm not covered or I'm covered for this and I'm not covered for that? I mean, do you just jam more jargon in your contract that says more jibber jabber, or how would you do that?
Yeah. Yeah. Oh, I mean, the first thing is to again make sure you have the expert, and it's not unusual for me to get on the phone with certainly my clients and do a deep dive. Eric and I just came off an hour-long conversation with one of our clients, and we literally walked through the policy and explained those provisions because it is a foreign language, right? It's insurance. But it's not unheard of to get on the phone with customers. I'll be honest though, Greg, most of your customers, if they're asking about cyber liability at all, they want to know what you're insuring and what the limits of insurance are, and maybe get a certificate of insurance. And that's about it, right? Because you're not talking about a level of underlying knowledge and competency where they're going to want to get deeper than that.
Right.
This question is directed to Erica. Erica, how have cyber attacks proliferated for MSPs? What do you see out there?
Yeah, MSPs, yeah, they are quite the target. I think due to the MSP position as a centralized service provider, MSPs have access to multiple client networks, and they, provide services that usually require both trusted network connectivity and privileged access. And they need that on the customer systems. So if you are to compromise an MSP, the effect could cascade throughout their customer base, and you could find yourself, perhaps, deciding the ransom for each endpoint and taking your, extortion from, one customer to 30 or 50 customers. We saw a lot of this certainly last year and this year as well. And in 2022, CISA, the NSA, the FBI, in collaboration with multiple different global agencies, they issued a joint advisory noting that they had observed an increase in malicious cyber activity targeting MSPs. And so they were warning that, threat actors can use vulnerable MSPs as an initial access vector, as like an entry point to get to multiple different victims with what could potentially be, globally cascading effects depending on the size of the MSP and those customers. So yeah, the interconnected nature of MSPs and the services they provide, um, they create a sort of downstream effect that is referred to sometimes as a digital supply chain.
Mm,
And we
mm.
saw this with like the vulnerability in the Kaseya IT service management software. And even in the Move It Transfer Secure Managed File Transfer software, that's a mouthful. But basically, if there's a tool that an MSP uses that helps to facilitate the work that they do, and there is a vulnerability in the software for that tool, well, compromising that tool, and if you can get a 0 day where a patch isn't even available, you get all this runtime um, to really, sort of have fun on the system. So it's really important on the MSP end, on the customer end, on the customer end, of course, that vendor management, but then, of course, on the MSP end, just ensuring that you have the appropriate security controls in place so that identities can't be hijacked and run amok.
Well, that's a great segue for the next question, because what vendor management controls are important for MSPs, right? Because there's other vendors involved on the network. So
Mhm.
yeah, having those controls, and I don't know how Gregory does it, but what do you have to say about that?
Well, I'd say so. Again, going back to my underwriting days, whenever I was underwriting an account that had, a high dependency or just relied upon a lot of third party providers, I would identify that as an exposure to a potential either, contingent business interruption or, ransomware, for example. Um, I would want to see that there was multi factor authentication required, that the MSP's movements were controlled, so that they're only given the privileges that they absolutely need, and that those privileges expire within a certain period of time. So I would want to see a number of controls that that restrict the movements of the MSP, that also log the movements of the MSP. Um, and then, of course, protections also in place so that privileged identities couldn't be abused.
Well, thanks for sharing.
I have another question, comment. So one of the things that, like I said earlier, is that insurance lawyers, even customers, don't understand what IT even means or what even cybersecurity means. They don't even know what it is. And sometimes we're hired to do a specific task. Someone might
Hmm.
say, okay, come in and image my computers. And I'm like,
Hmm.
all right, I'll do that. And then they're like, well, that includes cybersecurity and all of my IT. And we're like, no, it doesn't. It's not. Our service is not cybersecurity, is not, maintaining your multi-factor authentication. And in some other instances, they just say to us, you're in charge. You know what I mean? You're in
Yeah.
charge of our IT. I mean, how can you possibly be responsible for you can't be responsible for everything. And how do you segue that into your, other than just calling out every single task you do for that person? How can you protect yourself against someone who says, you do my IT?
Yeah, I think so. I'm not an IT person, right? But I do think that it's important whenever you're working with a customer, and I'll take a step back for a moment too. I'll say that in the underwriting process, sometimes things check the bad box instead of the good box. And sometimes that seems like, you know what, I don't really like this risk very much. But if you have a conversation, you might find out, well, there's actually a different mitigation in place that you didn't ask about on the application. So we actually are protecting that. So maybe we do allow our MSP to have privileged access on our computer systems, but maybe we have certain rules set so that that identity can only do whatever function we need it to do. I think it's tough when an organization already sort of lacks that expertise and they're asking for the MSP, to come in and to do this work for them. But I think it just, I think it's in your interest as the MSP to ensure that you safeguard your access as well. And then, I think when it comes to, you had asked a question, if you don't mind repeating it, about like how can we provision for all these things? And I think the short answer is you cannot. A contract is just a contract, right? And a contract is a meeting of minds, certainly. But of course, a lot of what goes into, these interactions with clients is customer service, and building into those contracts, a certain, remediation plan. Perhaps building into the contracts, when something goes wrong, you agree to let us know by this time, and you give us this amount of time to fix it, or we return X amount of dollars. So there are ways to sort of provision for at least problem solving so that you don't get to the point of a lawsuit.
Yeah. And then the other thing I wanted to know was, who comes up with, I hear these numbers like, oh, you know, LastPass lost $23 million in one day. I'm like, how do they calculate that? I mean, how are you calculating these numbers? How could you possibly lose $23 million from a password file being compromised? I mean, did someone take $23 million out of a bank account that had a password on it that they compromised? These numbers they throw out are just like, in my mind, they're just imaginary numbers. Do you guys see what those numbers mean and where they come from? Where do they come from? I just hear numbers and I'm all, that doesn't
When
make
I
any
hear
sense.
if I hear there's a multi-million dollar, business interruption, this is clearly a billion-dollar company, right? And so when I was a claims adjuster, we had, and I'm going to give them a shout out, a company called MDD. They were forensic accountants, and they came in and made us all cross-eyed, showing us how they calculate what the, business interruption loss actually is. Claims adjusters typically aren't determining that on their own. And I think the number comes from, forensic accounting. I think it comes from, if your net income, right, plus operating expenses is $1 million a day, and you're down for 5 days, uh, because you can't operate your business. That's a $5 million loss, and perhaps that's like a huge amount of money. I know it is to me. But if you're, $100 billion company, it's certainly inconvenient but recoverable.
Do you get to agree on who your forensic accountants are in before, do you just don't hire your friend Bob's forensic accountants firm? Or do you get to collaborate and say, okay, not Bob, because it's going to be a little on the high end when Bob's doing it for you guys and low on our ends. You know what I mean? Do you
Yeah.
get to agree upon who your forensic accountants will be?
I mean, so some policies will just build there, it's just built in. You can hire your own forensic accountant, but they're going to use one as well.
Right.
And I'll also let Steve or Jason chime in here as well, because this is an area where it really makes a lot of sense to depend on your broker and to depend on your insurance carrier, because an insurance carrier certainly does not want to act in bad faith. And so they're not going to enlist the services of a fraudulent, forensic accounting firm. They have recommendations they could make. But this could be something, I'm not sure if Steve or Jason, have you guys ever run into this before?
Yeah, on a claims specific basis, you do run into requests for, hey, we're really familiar with this vendor or provider, we want to utilize them. The insurance carrier is going to have panel experts, and they're going to want to utilize those because oftentimes they've pre-negotiated rates. The workaround is to be proactive before the policies are written. If an MSP feels that they are this tied to a certain provider, we can go into the marketplace and say, hey, we want to pre-designate this provider to respond in the event of a loss. Certain carriers will do that. Certain insurance carriers will not do that. But it is a conversation that can be had. It just has to be had prior to a loss in order to ensure that you're able to use who you want when one does occur.
Great.
And you can always, of course, hire a forensic accountant at your own expense. And I believe, and this may not be true for every insurance carrier, but insureds are typically also eligible for those pre-negotiated discounts if they use those vendors for, uncovered matters.
Well, guys, we are coming to the top of the hour. This conversation has gone way past our standard podcast time. So I still have like 4 or 5 more questions to ask, but I think I'm going to save them for the webinar because this is a great conversation. You guys have provided
I
some
enjoyed it.
very valuable and insightful information. And I know our listeners are going to appreciate it because there's we are the our intentions at the MSP Corner is to help MSPs not only build sustainable IT firms, but we want them to also be properly educated, insured, and have all the right resources in place so they run a successful business. And I think you guys are a definite add value to them. So I'm excited about the webinar. I'm going to work with Steve on the content for promoting you guys on our platform. So we get you guys a good turnout. But I'll be announcing it in our newsletter and all our groups. But we're gonna, since we're coming to the top of the hour, and I have another meeting in a few minutes, but I'm going to save my questions for the webinar. So, and I believe Steve and I are going to work on putting it together after Thanksgiving. So,
Perfect.
yeah. Is that right, Steve? We're going to shoot for after Thanksgiving.
It is. Thanks for your flexibility on that.
Yeah. No worries. I know how end of the year it gets really busy, so no worries. But yeah, I still have lots of questions. I know Gregory's had a lot of great questions himself, but I appreciate all of you guys making time to be here because I know you guys are busy. But I look forward to the webinar, and anybody who is listening, they can always email me at info@mspcorner.com, and I can get you in touch with Erica or with Steve or with Jason. You just have to let me know who you would like to speak to. But guys, thanks again for joining, and I look forward to the webinar.
Yeah,
All right,
thank you so much for
Brenda.
having us.
Nice
Thanks
to
for a
meet you,
great
Gregory.
conversation.
Thanks.
Yeah. Thanks again, guys. Thanks, Gregory.
Take care.
Sure.
All right, you
Thanks.
too.
Bye.
Okay. Bye-bye. Thank you for listening, and don't forget to sign up to be a member on www.mspcorner.com. Please share our link with a CEO who will find our information beneficial to their business. Have an awesome day.